The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com, here to give you a market update and a recap. And what I thought I would do today is something just a little bit different. I thought I would create a small learning opportunity for us here as I do the market recap. And the way that I'm going to do this is I have not prepared or actually thought about what I was going to say in advance. I am coming in blind. I didn't actually really get to look at the market much today because I was traveling, so I spent most of the day on an airplane. But I wanted to come in and create for you a learning experience on how to think as you approach the markets. Now, of course, we love providing you market updates and giving you our professional insight, but the best thing we can do for you, and the reason that you are subscribed to Tackle Trading, is to help you learn how to think like a trader, to be a part of the community, and to really understand the thought processes that go in to having a successful trading business. So we're coming in with really no pre-formulated thoughts, and I'm going to help you guys understand how I go about analyzing and assessing what's going on with the broad market. So I'm going to jump in and start out by clicking on the menu, and the quickest place to go get information is here at the Trade Center. So I'm going to go click on the Trade Center. And right here, just right away, right out of the gates, I can see some information that China was down, and the market's about to open in a couple minutes this time of day. So, it's looking at that. That kind of gives me some insight into what has happened. And I can see that the U.S. markets were up. Asian markets were down, and European markets were a little split between the FTSE and the DAX. And then, S&P is really where I'm focused. So I want to see a chart of the S&P really quickly to help me formulate my opinion. So I'm going to go to the futures, really just jump out real quick. And I go to the futures because they give me the strongest real-time performance. Now right here, the default setting is on a 5-minute chart, and I can see from the open of the market, it traded a little higher, but was kind of, up and down for the day. And to put that into perspective, to help me understand what this daily movement means, I'm going to drop it to a daily time frame and put it into context. And so right here, I can very, very quickly see that the market is in a retracement down, put in a heavy day of trading down on Monday. Then here on Tuesday, it's kind of stalling out a bit. And so you kind of ask the question, well, that's kind of a known little zone of old resistance. And it puts it into a ballpark where somewhere between, I think, here and 2050, you'd be finding a support zone. And I can see that overall, my context is, for the most part, a bullish retracement. So right there, I have some insight. Just the pattern is it was running up, and prices have pulled down. And so when we see that, little cycle in here, I already have a pre-existing context that this time of year, on average, is bullish. And so it's seasonally from about mid-October through end of mid-December, even towards the end of the year, you'll see bullishness. And the best months for the market are between October all the way through May, and the worst months of the markets are typically January, February. They stall out a little bit, but depending on the market's bias. And then May, the old saying is May sell and go away. The worst month is September. The masses don't realize it until it's October, and then by then, if it's it's the seasonal fourth quarter rally. So really, the best time for the markets is October clear through May is kind of how we look at it. Now that being said, I have a context, I have a pattern, and I can go look at the other parts of the market. I can look at the Dow Jones and get a picture of that and see, oh look, same picture. It's running to new highs and also in a bit of a retracement. I could look at the NASDAQ. Now, the NASDAQ's been leading the charge, and the NASDAQ actually established new highs. It broke to new highs, and it's coming down into a known support area of old ceilings, 4,600. And so it's pulling down. And they all have very, very similar bullish retracement setups. So from here, I can keep looking at energy and bonds and softs and metals and different things here. But I'm actually going to stop here and go back out and look at either a heat map to give me some perspective, or into a sector analysis. Now, heat maps give me what has happened. If you're watching them in real time during the market, you can see how the conditions are for that day, and it gives you some real time what's hot, what's not, which would be a good piece of information for day traders. But when I drop this out to look at the last quarter, 3 months, it gives me some insight of what's been hot, has been. Doesn't necessarily tell me what's going to happen. See, if you were to look at the market for the last week or so, you'd see lots of red because it's in a retracement. Well, that's what has happened. And it's trading's a little bit like the game of chess. You have to think several moves in advance. So the concept is on a weekly perspective, I see lots of red on average, but the perspective is that it's been in an upward trend, and for the last week it's been pulling down. My expectation is that I'm thinking for the next move, what's it going to do next? I expect it to run up, and I'm going to be very cautiously bullish, but that's my context. So what has happened, the fact that it's been red over the last week, probably doesn't indicate to me that it's going to keep going down, although it could. Based off of the technical assessment, it's poised, I think, to go up inside the context of the seasonal analysis. Now, what do I come in here for is to see what sectors have been doing well. And I can look at it from, what's going on with the S&P and drop it out for what's been going on for the last month. And what I'm looking for here is, where's the strength? The market's been doing pretty well on average, and I can see some places where there's stinkers. IBM we've heard about, Matt talked about that. Walmart, big stinker. That I'm going to actually talk a little bit about that being the canary in the coal mine, warning us. And then, basic materials, there's energy and oil's been beaten up. So I can see that perspective-wise and kind of get an idea of what's going on there. We could drop it back out to the quarter, 3 months performance. And really what I'm learning right now is that the hottest sectors are technology and services. And that makes perfect sense. Basic materials have had a nice recovery, and industrials have had an okay recovery, but financials a little stagnant, and consumer goods a little stagnant, which you might expect them to do a little bit better. Well, this is again kind of giving me some context of what has happened, and then from here I usually would jump into some broad sector and broad market analysis. Now, what I'm looking to understand is, again, has money been moving? This is all hindsight. When you come in here, you've got a histogram, and you're looking at the market. It's comparing it to the S&P. That's the default setting. So the baseline, meaning the zero, is the S&P, and it's telling me what sectors are outperforming or underperforming. And it's looking at about 200 days. Well, that's just shy of a year by about 50 trading days. So if I wanted to expand that out to 252 trading days in a year, ballpark that, 253-ish days, I can see best sector has been cyclicals, followed by technology. Industrials and materials have been indicative of less. That's kind of a slowdown for the market. Those are hotter when the market's expanding, when we're seeing building energy is getting its trash kicked, and looking at the charts, it's easy to see. Consumer staples has been strong. Healthcare is usually recession resistant. Utilities have been underperforming. And again, this is over the last 253 days. Well, let's bring that into about 63 days, which is the number of trading days in the average quarter. And cyclicals and technology is hot. Well, we already saw the NASDAQ breaking to new highs, so I know technology is hot. I know that now cyclicals are hot. Healthcare has not been doing well recently, and utilities are the weakest. Energy's had a recovery. So we can kind of see in the last 3 months, really, if I'm looking at a bullish area of the market right now, what has been performing the best has been cyclicals and technology. So right there, I've got some insight. And it's going to help me, again, find something to trade. Now, I probably always need to make sure I have a good understanding of what's going on with that economic calendar. And you can look at the economic calendar, and it'll give you, again, some good insight into what are the catalysts this week. And, when we see red stars that we got on the 12th here, some unemployment claims, jobless claims, and we can come off of what we saw last week. If we were to go, look at the previous week, I actually really like to look at I like the Forex calendar. It's awesome. It takes you to Forex Factory, which is one of my favorites, but it's just a great calendar. Last week, we had some pretty interesting numbers come out. We had manufacturing numbers, came out as expected. We had ECB, European Central Bank, Mario Draghi speaking, and you had some other little minor stuff out there. But the big stuff that happens the first Friday of every month is the non-farms payroll report and the jobless claims or the unemployment reports. Janet Yellen spoke. Now we're starting to see some good signs that they'll probably be raising interest rates, and I think that's probably more and more likely because what they're seeing is that the unemployment rate is at 5.0, where they projected, down from the previous at 5.1. Seasonal help certainly does increase that. And then the non-farms employment change came out. The forecast was 181, came in at 271. And then, we can see just on average that we've got some pretty good basic numbers on that. And so the numbers, although, I would say a little suspect, the information's in there. So you can see that, the economy, in theory, they'd say is doing relatively well. And that's kind of been the reservation with raising interest rates. So now, of course, come in and I want to look at what's going on this week. And here, this is helpful, especially if you're trading currencies, to kind of have a more thorough look. I've got it filtered down to just the U.S. and Europe. And this week, again, Wednesday, I've got more Draghi speak, which is anytime anybody talks about monetary policy, that could move it. He's talking again on Thursday, and Janet Yellen's talking. So those would be the things to watch. And so I would make sure I understand that, hey, this is set, I believe this is set to Eastern time. So the biggest events that I see here this week is federal banks talking. Central banks, you're talking about the Federal Reserve Bank and the Central Bank. ECB, Mario Draghi, and Janet Yellen are the biggest pieces of things that could really move the market. You got some German GDP and then retail sales on Friday. Now, retail sales are important this time of year. And I'd say the biggest event coming up in the near future would be the reports for Black Friday sales results. That's one of those things that kind of really determine whether this market stays bullish through December. Now, that being said, we've got a pretty good understanding of overall conditions. The market's in a bullish retracement. From here, I'd probably go look for my trading candidates, check on my current positions. But really what I do is I always jump in and get a good look at the charts. So I can do a top-down approach. And I pop into Thinkorswim and get a good-looking chart here. So I'm looking at the E-mini S&P futures, and I can see where it expanded to new highs, and it's pulling down into a known support zone. If you look to the left, you're in a support zone. And you got a small hammer-style candle. You had some pretty big volume in the last 2 days. And I want to see where the volume really crept in, so I'm going to drop it down into 15 minutes or so. And what I'm going to be looking for is where did that volume really kick in the hardest. So the last couple days, we got some above average volume. And we'll zoom in right in here. And you had some pretty steep selling early on. And then as it hit support, you had some typical volume. First part of the rally, midday is always quiet. And it stayed strong through the close. Kind of drifted up overnight, came back down, gave up the ground, and a lot of volume kicked in on the open. Also see a lot of volume associated with support here. Boom, boom, boom. So what I'm looking for is did it come in with support? And big volume in here came in at the market open at support and stayed strong up through the close. And you might notice there's a W pattern here. Now the W pattern, let's bring that back out. Let's go into, again, intraday and put that into the last, say, we'll go 20 days and set it to 30 minutes or so. And here's the context of the overall trend. And you could, possibly even forecast out here. We'd probably have to drop it out, but this is ballpark trend zone. That's just a rough drawing, and I, of course, drew that, so it's a little subjective. But here's what I'm seeing in the market is it's run through, and we could go grab a little bit more time. Let's go in and get the last, let's go into intraday and grab the last 30 days and set it to 1 hour. And now I actually can see, general trend context. This is where I can connect a few pivot points, and that's where that's that same trend ballpark. And I see a W pattern in here. Double, bottom, that's where I expect it to, if it's going to reverse for us, like the bullish retracement I believe we're in. It needs to break that W, so it needs to break above these highs. So now I have a trigger. That's the confirmation I'm going to be looking at. So that's our general context. Again, from a daily perspective, we're looking at a bullish retracement, but hopefully that helps you understand why the hammer is important, because that's where our little W pattern's coming in. The bottom here, boom. Bottom here, boom. That's your double bottom after a retracement. So in the proper context of upward trend, this is an area where we could see the buyers step in after a small breather in the market. And I would expect the next rally to be a little bit smaller, but probably get up into the 2120 zone, maybe as high as 2140. A little bit smaller run as it comes up and tests those previous highs. We of course can pop in and look at the other sectors, like the /NQ for the NASDAQ, and this is cleared resistance, more of a textbook bullish retracement. Long shadows on those candles, not a bullish candle, but long shadows. And again, in the context of the old ceiling, could be an area where we would see some buying. It certainly makes some sense, and kind of comes down to what the market's general context is. From here, I usually like to go in, and I've got a good idea of what's going on with the broad market. You can go use a little watch list, and you can come in and look at, we can pop in like sector ETFs. So here's my sector ETFs. So I've got my sector ETFs, and this is a great place to start just by looking at the charts. Energy is in a bullish retracement. Boom, boom. It's trading in a known support resistance zone. I could really say overall context is downward trend, but I've got a 2-leg up and a bullish retracement. Basic materials, bullish retracement. A big reversal pattern, bullish retracement. Industrials, slowing momentum. The tops were getting closer, so I don't like it. Even though it's a retracement, I don't like that one as much. And financials, cleared new highs. So I actually like the financial sector because it's trading into a known support zone. And I could go look for candidates in there. Oh, excuse me, I'm not financials. I clicked on XLK. Excuse me, that's the technology sector. My bad. Technology sector. We already established that we like that one. Now, utilities, gap down. Getting beat up down here, boom. Watching for a higher low to fill the gap. It's not the hottest sector, so it'd be easier to go pick something else off. Now we got the financials. And financials are coming up into known areas of resistance. It isn't a bullish retracement, but it's just not as pretty as the others. Now here comes the consumer staples. We've talked about being one of the hottest parts of the market, and it's gone through a pretty deep correction in here. So we got a correction, boom, got an old order need to clear out. But wasn't a retracement, continued to retrace deeper. The deeper the retracement, I still expect a rally here, but now I don't expect a strong rally. The shallower the retracement, usually the better the run I expect. It's okay. It's definitely in a known buy zone, support resistance neighborhood, and it's got reversal candles. Cyclicals, this time of year, that looks pretty. Broke resistance and a very strong bullish engulfing on good volume. I like that. That's good. And then healthcare, it's a bullish retracement. It's popped up, dropped. So I've got my general context. Now, if I were to go look at that, for example, consumer cyclicals, I could come in here and I can go look at some candidates, and just off the top of my head, I just finished a cup of Starbucks. So Starbucks, and I've got a trade on it that I put on from earlier today that I was looking at the right context here. So I see the market popping, retracing. It's the exact same pattern as the broad market. It's the same pattern as the little industry group. Whoops. And it's a kind of a bull flag pattern into the known support resistance zone. And here's the bullish movement, typical volume. I already got in on the candle above the candle high, and now just my stop loss up. So I'm taking care of current trades, adjusting stops, And that's kind of the general scenario there. So now if I was looking to get in a new trade here, I'd be looking to put an order to buy above the current candle high, just a couple pennies above it. Got $1.24 on the ATR, and you could look for an entry there. So that's kind of an overall, from start to finish, going through analyzing the market. And of course, you'd want to go take care of your current trades. Make sure you're managing your current positions based off of your analysis and your bias. But what it leads me to be overall is very cautiously bullish. And I've got my favored sectors of technology, consumer cyclicals, consumer discretionaries, staples have been strong. And then I probably would look for maybe some of those energy stocks, particularly this time of year, gas, heating, that type of stuff. So if you could go look at some of those, that could give you some insight into how to find good technical swing trades. And we just completed a top-down market analysis, taught you a little bit about how to trade at the same point in time, how to think like a trader, and to give you an overall market recap and bias. This is Coach D with TackleTrading.com. Hopefully you enjoyed that little thought process going through there, and we look forward to seeing you all in the clubhouse.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.